Ladies and gentlemen, markets are generally trading higher today, really on the news of these quote-unquote reciprocal tariffs that we were expected to get announced today. All we heard was 25% tariffs on steel and aluminum. And well, on Friday, with the S&P that dropped over 1%, including the move lower in after hours, this was kind of seen as good news. Now, it does also set us up for a breakout this week. In my opinion, we did not get the Monday gap down that we have seen over the last 3 weeks. And if we can break this downtrending trend line to the upside, which is going to be roughly around the 607 level, that's going to send us upwards to a brand new trading range and ultimately new all-time high. Here in this video, I will go over your breaking news today, your earnings coming out today and after hours and tomorrow, as well as your big catalyst tomorrow, which is Fed Jerome Powell. And Fed Jerome Powell is going to be, I think, massive for markets. So with that said, ladies and gentlemen, hit the like button. Consider subscribing to the channel if you like markets, if you like making more money, if you like AI stocks, and all of the things that we talk about here on this channel each and every single day. Only about 50% of you guys are subscribed to the channel. So do me a quick favor, hit that subscribe button, and let's get started. So as I mentioned, that's the kind of the big reason why markets are higher today, is not as bad of a tariff announcement as we were kind of expecting on Friday. You could see the main headline on CNBC is Trump to impose 25% tariffs on steel and aluminum. And obviously there's going to be some winners and some losers. Countries that will be hit the most by this are Canada, Mexico, Germany, and Asian exporters. You have had Germany's president come out and say today, well, if Trump's going to put tariffs on us, then you can expect to have tariffs put on the U.S. from Germany, right? Tit for tat kind of thing. German Chancellor Scholz says on Trump tariff threat, those who impose tariffs must expect retaliatory tariffs. And Mexico's president says, we are going to wait to hear if Trump announces tariffs on steel and aluminum imports. Kind of seems like we've already gotten a little bit of clarity, but there's still some details that need to be announced. But still, with that said, the Dow is up 0.33%, S&P 500 is up 0.68%, NASDAQ is up 1.1%, Russell 2000 is up 0.5%. The Russell was really one of the biggest losers today, and that has kind of turned around a bit. The VIX is down about 4.5%. You can see 10-year Treasury yields are largely unchanged today. Oil is up almost 2%, which is quite a big move up for oil. We're finding a lot of support around that $70 per barrel oil level. If we could fall below that, that's going to be really good for inflation. And gold is up about 1.66% today, almost breaking above $3,000 per ounce. We also had other news today from the New York Fed with January 1-year and 3-year ahead expected inflation that was flat or unchanged at 3%. January's 5-year ahead expected inflation came in at 3% versus December's at 2.7%. You can also see via this New York Fed survey, January saw larger expected rises for food, gas, rent, college, and medical prices. And as Nick Timmerhouse writes on X, in the New York Fed's consumer survey, inflation expectations at the 1- and 3-year horizons were unchanged in January, opening up a notable gap with the University of Michigan surveys, which showed big increases in January and in February. And I talked about this on Friday, and a reason why the Friday inflation expectations data that we got, that kind of caused the markets to freak out as well. Part of the reason we were down about 1% on Friday was really just not accurate because of the political skew in that survey, where you have Democratic respondents expecting 5.5% inflation, independents expecting 3% inflation, and Republicans expecting 0.1% inflation, essentially no inflation over the next 1 year. And that skewed the numbers. But you can see in the New York Fed survey, nothing changed. And I think this is kind of a sigh of relief for investors. Goldman Sachs bull bear indicator remains above 70%, just suggesting that markets are on the high end of valuations. But, this is not the most accurate thing, I would say, because it's kind of skewed by different asset classes, like big tech, for an example. Big tech being as high as it is with 40% of the S&P or so is big tech. Like, that area has done very well. Theoretically, you could see big tech not do much of anything, and the rest of the markets rally, a broadening in the markets, and you wouldn't necessarily get the Goldman Sachs bull bear market indicator that moves higher. A lot of it is really just, kind of dictated around what big tech does. And from that perspective, I really don't give this too much weight because, after all, I'm not that bullish on big tech for this year. Brazil's president says they are planning to impose tariffs on U.S. tech firms if Trump goes ahead with plans for steel tariffs. I mean, this sounds like a negative headline, but really, does Meta care if they're tariffed from Brazil? Yeah, probably not. It's not going to do much to affect these companies. According to Sentiment Trader, the S&P 500's one-year Sharpe ratio has peaked, which historically leads to periods of volatile/moderate returns. And historically speaking, you could say that's correct, but you've already started to retrace lower quite a bit, and you have already seen some volatility, and you're kind of in a median range overall. So I don't think at this point it's a fair thing to look at and say, well, we're kind of doomed for this year. That's much the same as saying the Eagles won the Super Bowl, so that means we're going to have a bad year this year. Like, yeah, if you look at the data, that's true. I mean, every time Philadelphia wins a World Series in baseball or a Super Bowl in the NFL, the market has a really bad year. But again, making an investment decision based on who won the Super Bowl, you're not going to find me doing that. Another big story of the day today is Trump says that Doge efforts may have found fraud in treasuries. That could get very interesting as more details come out. Sentiment for the SPY today, despite the rise you're seeing in markets, is still bearish at 36. 1 day ago, it was bullish at 30. CNN's Fear and Greed Index today is popping back into neutral territory. On Friday, it was at 39. So this is actually an 8-point jump in the CNN Fear and Greed Index. It's actually a very large move in the bullish direction, okay? Even though we're not even at quite midway of neutral, which is 50, you're still suppressed overall. This is a big improvement in what some people would say is overall sentiment today. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand is neutral. And junk bond demand is currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, that is up almost 3% today to about 49.5%. So still more than half of stocks are not above their 50-day moving average. There is a lot of room for broader strength in our markets before we're anything close to like overextended or too optimistic or anything along those lines. Considering last week we hit a one-year bearish high, 42.9% of survey respondents to the AI Investor Sentiment Survey expect the stock market to be lower 6 months from now. That very rarely ever happens. Okay, like, it's a one-year high, and we've seen a lot of things happen in the last year where markets were, panicky. So, that's one of those contrarian indicators that says if so many people are bearish, maybe now is a good time to be bullish. And that is what you should consider. Okay, just consider it. Think about it as a thought. Neutral investors at 23.8%, which is historically on the low side, and bullish investors as well, historically on the low side at 33.3%. Here today in After Hours, you will be getting earnings from Astra Labs. Astra Labs does a lot of business directly with NVIDIA, AMD, and Intel. That one could be important Fluence, Vertex, Excelis, Medpace, Lattice Semiconductor, Inspire, and others report today in after hours. Tomorrow morning, you have Shopify, Coca-Cola, Humana, BP, AutoNation, S&P Global, and Marriott International. This morning, we did have earnings from McDonald's, which McDonald's stock did well, but it was some of the worst revenue numbers we've seen for McDonald's in quite a while. So keep that in mind. Tuesday and after hours, Super Micro, Upstart, DoorDash, Lyft, Freshworks, Energy Transfer, Gilead, Confluent, Welltower, and Zillow Group. Later on this week on Wednesday, Vertiv, another AI name. They really have the liquid cooling technology for GPUs and data centers. CVS Health, Barrick, Generac, Biogen, Kraft Heinz, and Ryder. Wednesday and after hours, Reddit, AppLovin, Robinhood, Dutch Bros, Albert Marley, The Trade Desk, Cisco, MGM Resorts. Thursday, another big day, Datadog, CyberArk, John Deere, Crocs, Sony, and GE Healthcare in pre-market. And after hours, Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. But really the big catalyst for tomorrow, and likely the big catalyst for really the rest of this week, at least until Friday's retail sales report, is the testimony from Jerome Powell coming tomorrow. Now, Jerome Powell has an opportunity here, okay? And I should mention we have CPI on Wednesday, so the day after tomorrow. Jerome Powell already knows what the inflation numbers are going to look like. Jerome Powell could take a very dovish approach towards tomorrow and testifying in front of the Senate, or he could take a lot more of a hawkish approach, this wait and see approach that, you know, we should hold here for longer. Now, I think it's a little bit different tomorrow versus obviously like a press conference, because Jerome Powell is going to have hours to talk. Okay, at least 2 hours or so to talk. And markets are going to hang on to every word Powell says, just like they do during the press conference. But like the press conference, you only have like 40 minutes of questions and answers. And, one word that Jerome Powell says can flip the whole thing bullish or bearish, when perhaps that's not really what he was going for. Like 2 press conferences ago, not the last one we just had, but the one before that, December 18th, everyone was like, oh my gosh, Powell's a hawk and all this, when he really only said like one thing that stood out as maybe a little on the hawkish side. I don't think Powell meant to be as hawkish as he came off December 18th. And he really sounded bullish the last press conference. Okay. Powell could take this opportunity to really set the record straight in his stance on Fed policy and the economy and the labor market, and so on and so forth. Also, it will be interesting, I think, from the market's perspective, to hear what deficits could look like if Jerome Powell answers that. He may not answer that, or what kind of effect that could have on inflation. Jerome Powell could confirm that maybe Doge or some of the cost-cutting efforts in Washington are going to be positive for inflation progress. I would expect something like that is answered, or at least asked. If he answers that or not, I think is a totally different thing. But I think Jerome Powell is overall going to sound optimistic on bringing down inflation and rate cuts. It will be interesting to see what Jerome Powell says about the labor market, considering you now have like 70,000 government employees that have accepted a buyout offer. There's going to be more labor supply coming to our markets here in the next coming weeks and months. And while that could drive up the unemployment rate, and whether or not Fed Powell acknowledges that as potentially a reason to cut rates will be interesting. And again, I just overall expect Powell is going to come off a lot more dovish than we thought. And for markets that still are assigning about a 20% probability of the Fed raising rates this year, I don't think that's what we're going to walk away with. I don't think we're going to walk away with, thinking the Fed has any chance of raising rates. I think it's going to be far from that. Now, the markets are currently expecting the first Fed rate cut July 30th, where you're pricing in a rate cut by 44.3%, a continued pause at 36.2% and a 2 rate cuts at about 17% by July 30th. June 18th is the close one right now. Technically, you're pricing in a pause still, 46.0% chance of a pause, and 43.8% chance of a rate cut. So you're about 3% off of, pricing in a rate cut versus a pause on June 18th. I actually think via Powell's statement, you're going to see the odds of a June 18th cut dramatically rise tomorrow. And I think you're also going to see the odds of a May 7th cut also rise. Currently, the odds of a cut on May 7th is only 22%. I think that's going to go up quite a bit coming tomorrow. Probably closer to about 50-50. 50% chance of a cut, 50% chance of a pause, based on the testimonial that Powell is going to give. Because after all, I don't think Powell is nearly as hawkish as Wall Street believes he is. I don't think the Fed is as concerned about tariffs at this point as they were previously. Okay, we haven't got much for tariffs, and as long as 25% tariffs on Canada and Mexico do not go into effect, and that leads to a trade war and back and forth tariffing, then we really don't have much to worry about from a tariff inflation perspective. And I think the Fed is starting to realize that. Now, obviously, I'm speculating here. Jerome Powell could come out tomorrow and be very hawkish, but I just don't think that makes a whole lot of sense right now. And from that perspective, I do think we could soon be in a breakout for the S&P. If you get above this downtrending line here, you're going to break out to the upside, break a new all-time high, and set a new trading range, just like you did really from the previous market highs, December 6th or so, through January 16th, where you kind of traded lower during this time. You formed this downtrending trend line. Once you broke this on January 17th, you went up about 2.5%. And then we've kind of been in this pattern of, gap down Monday, rise Tuesday, Wednesday, Thursday, bad day on Friday, gap down on Monday, right? That's kind of been the pattern. Although today you broke that. You did not gap down on Monday. Hey, if we continue on that same pattern, Tuesday, Wednesday, Thursday could be pretty good days. And so far this year, Tuesday, Wednesday, Thursdays have been very green days. Okay, you're going up like 0.5% on most Tuesdays, Wednesdays, and Thursdays on a kind of running rate. Okay, I believe the annualized return on Thursday is like 130%. Right, so the Thursday. Kind of extrapolate that over the course of this entire year, and markets would be up 130%. Like, midweek has been pretty good for markets so far this year. And if that continues and we break out from here, then that's going to set you into a whole new range. And I wouldn't be surprised if small caps, cyclicals, industrials, financials really are the ones that do a lot of the lifting versus like big tech. But after all, let me know what you guys think about this information down below in the comment section. We do have CPI coming out on Wednesday, so regardless of what Powell says, all eyes are going to be on your CPI report, in which expectations are kind of high. It's, we're expecting higher inflation on a month-over-month basis, and I think that's going to come in on the low side. So honestly, I'm pretty excited for what this week has in store. Keep in mind, Jerome Powell will testify in front of the Senate tomorrow, as well as on Wednesday. At the same time, again, CPI comes out. So definitely going to be a pretty volatile next couple of days or so. Ladies and gentlemen, enjoy the rest of your day, and I will see you in the next one.